Have you ever wondered what steps the government is taking to combat fraudulent business activities? Today, we'll dive into a crucial piece of legislation, the Corporate Transparency Act. This act has been designed as a powerful tool to identify and weed out fraudsters and scammers who have been hiding behind the anonymity provided by LLCs and other business entities. The main weapon in the arsenal of the Corporate Transparency Act is the BOI report, short for Beneficial Ownership and Information Reporting. This report is required from certain business entities, and non-compliance can lead to severe penalties. We're talking about fines of up to $500 per day, amounting to a staggering $10,000 per entity. If that doesn't make you sit up and take notice, perhaps the prospect of facing jail time will. Yes, you heard that right. Non-compliance could potentially land you behind bars. Now, you might be wondering who's tasked with enforcing this act. Meet FinCEN, the Financial Crimes Enforcement Network. This agency is at the front lines of the battle against illegal activities conducted through shell companies. They're the ones who will be ensuring transparency and compliance with the Corporate Transparency Act. A key point to note is that the requirement for filing the BOI report officially kicked in on January the 1st, 2024. If you're someone who had reporting entities before this date, you're required to report all of those legal entities. And if you created new entities after this date, you too are required to start filing your BOI reports. To sum it up, the Corporate Transparency Act is a serious step towards enhancing transparency and combating illegal activities conducted through business entities. With FinCEN at the helm, the goal is to peel back the layers of anonymity that have been shielding fraudulent activities. So, with penalties as severe as $500 per day and even jail time, it's clear that this new reporting requirement is not to be taken lightly. Now that we understand the gravity of the situation, let's delve into who is required to file this BOI report. A reporting company, as defined by the Financial Crimes Enforcement Network, or FinCEN, is typically a U.S. corporation or a limited liability company, LLC, that's been formed in the United States. Now, if you're an entrepreneur who's had any such reporting companies before the 1st of January 2024, you're required to report all of those past legal entities. And for those who are just starting out or planning to form new legal entities, as of January 1st, 2024, you too are required to file this BOI report. BOI, by the way, stands for Beneficial Ownership and Information Reporting. It's all about transparency and ensuring that there's a real accountable person behind every company. Now, if you're asking, when do I need to file this report? Well, let's break it down. For businesses that existed before the start of 2024, you have until the end of the year, December 31st, 2024, to get all of this filed. For new entities created from the start of 2024, you must file the BOI report within 30 days of filing the entity paperwork. And what happens if you don't comply? Well, the penalties are quite severe. You could face up to $500 per day per entity, up to a maximum of $10,000 per entity. Or even more daunting, you could be looking at up to 2 years of jail time. Yes, you heard that right, 2 years behind bars. It's also worth noting that for those creating new reporting companies in 2024, there's a bit of a grace period. You have 90 days to file, but after 2024, that's reduced to just 30 days. As we can see, both old and new companies are affected by these requirements, and the stakes are high for those who don't comply. Knowing who is required to file is only half the battle. Now let's explore what information you'll need to provide. In a drive towards transparency, it's important to know that the BOI report requires you to unmask the person behind the business. This isn't just about knowing your business, it's about knowing you. The BOI report, or the Beneficial Ownership and Information Reporting, requires you to provide your real name, real address, and real phone number. This is a step towards eradicating the shadowy figures behind shell companies and bringing them into the light. It's about ensuring that businesses are responsible and accountable. So, if you're a reporting company, you need to step up and disclose. If you had any reporting companies before January 1st, 2024, you must report all of them. And if you're creating new entities after that date, you must report them within 30 days of filing the entity paperwork. But don't fret, there's a grace period. For those creating new reporting companies in 2024, you have a 90-day window to file your BOI report. But come 2025, it's back to the 30-day deadline. Now, you may be wondering, how do I submit this report? Well, you can do it electronically on the Financial Crimes Enforcement Network or FinCEN's website. It's as simple as going to www.fincen.gov/BOI and following the prompts. But remember, failing to comply with these requirements can result in hefty fines up to $500 per day per entity, maxing out at $10,000 per entity, or even 2 years in jail. The stakes are high, and the government means business. With the government seeking full transparency, it's clear that hiding behind a business entity is no longer an option. So let's embrace this new era of transparency and accountability together. Stay tuned as we delve into who's exempt from filing a BOI report in our next segment. While many businesses are affected by this new requirement, there are some exceptions to the rule. Let's find out who's exempt. The world of business is as diverse as it is vast. While many new regulations apply across the board, there are always exceptions. The BOI report requirement, as enforced by the Corporate Transparency Act, is no different. Interestingly, while many businesses may be breaking into a sweat about this new requirement, there are 23 different scenarios where businesses may be exempt from filing a BOI report. Yes, you heard it right, 23. However, it's crucial to note that these exemptions are not a one-size-fits-all scenario. They are carefully crafted to cater to the specific needs and circumstances of different types of businesses. So, what are these exemptions? Well, the specifics can get quite detailed, but to give you a general idea, some exemptions include entities that are already highly regulated and have significant disclosure requirements, such as banks, credit unions, and public companies. Others include nonprofit organizations, dormant companies, and businesses owned or controlled by other larger companies that are already complying with these reporting requirements. Another important exemption is for companies that have a physical presence in the U.S., more than 20 full-time employees, and over $5 million in annual revenue. This exemption is designed to exclude larger, more established businesses that are less likely to be used for illicit activities. However, it's important to remember that these are just a few examples. The full list of exemptions is comprehensive and detailed. If you believe your business may qualify for an exemption, it is strongly recommended that you consult with a legal or financial professional. They can help you navigate the complexities of the Corporate Transparency Act and the BOI reporting requirements. While some may breathe a sigh of relief with these exemptions, it's essential to ensure you fully understand whether your business falls into one of these categories. As we wrap up, let's take a moment to review what we've covered. We began by introducing the Corporate Transparency Act, a law designed to combat illegal activities through shell companies to enhance transparency. This legislation was implemented by the Financial Crimes Enforcement Network, or FinCEN, and has led to the introduction of the Beneficial Ownership and Information, or BOI report. The BOI report, which officially launched on the first day of 2024, is a requirement for U.S.-based corporations and limited liability companies, collectively referred to as reporting companies. If your business falls under this category, you are required to fill out the BOI report within 30 days of filing your entity paperwork. If you had any reporting companies before the start of 2024, you have until the end of the year to report all those legal entities. Failure to comply with these requirements could result in a hefty fine of up to $500 per day per entity, with a cap of $10,000 per entity, or even face up to 2 years of jail time. And let's not forget, if you're setting up a reporting company in 2024, you have a grace period of 90 days to file your report. On the other hand, there are exceptions. FinCEN has listed 23 scenarios of individuals or entities that are exempt from filing the BOI report. If you fall into one of these categories, you're off the hook. In a nutshell, the Corporate Transparency Act and the BOI report are all about shining a light on the people behind the companies. They demand your real name, address, and contact information in a bid to ensure transparency and accountability. Keeping up with changing regulations can be challenging, but you can navigate these waters successfully with knowledge and understanding. Remember, when in doubt, consult with the professionals at VRMSZTAX.com. Thank you, and until next time, keep striving for greatness.